information, the same application, that is also the same thing, because at the end of the day you arrive at this overdraft again. So you just any information as at that time that you are doing it in a sequence order, you are interpreting the information. This is the way that you are going to do it when you have to prepare only bank reconciliation statement. And all those information that relate to the credit side of the cash book, you bring it down here. On credited check, the first you can, depending on the way you like it, you can first put on credited check here. On credited check, that is 1,800. Then standing order, 16 naira. Capital Bank, 3,000. Receipt overcast, 240 minus 200, which is 200. Then bank charges, that is 40 naira. Dishonor, check, that is 100 naira. Then bank error, which is 340 minus 300, that gives you 40 naira. Then you have it at the end of the day. If you add the figures together, you get 5,240. So this is greater than this, and you have 490, which is the overdraft. Bank balance as per overdraft. Balance as per overdraft. You see that the same application, but if you are told to prepare only this is how you are going to do it. And if you are told to start with the adjusted cash book, then you prepare adjusted and prepare bank reconciliation statement at the end of the day. So question might come from any angle. You must be very careful and very conversant and look at the instruction very well when you are tackling a bank reconciliation statement. Most of the time, you might be told to start with a balance as per cash book as per bank statement, whereby you put this one at the top here, and then you put this one in under here. So the information that relate to bank statement will be up, and the information that has to do with the bank as per cash book will be under this. And if this one is to be at the top, then you add it. And if this one is asked to put here, then you put less. So that is what we call bank reconciliation statement. Now we'll be talking about theme 4, which is classes of account and the final account of a sole trader. Under it we have topic 1, which says classification of account. And under classification of account is classified into 2, which is number 1 is a personal account and the impersonal account. What is a personal account? Personal account, this is a ledger account that deal with person, corporate entity with whom the business has transaction. It relates to transaction with person, and e.g. we have creditors account, debtors, we have individual, firms, corporate entity, and the example of it is Joe account, Tunde's account. So that are the examples of personal account. So the only thing the personal account is used for is to prepare account of a personal, which is creditor and debtor, and it is also used in a control account as well. So example of it, you can have many of the accounts. So any account that it has to do with personal account, you could have known that that is a personal account. Now under personal account, we have after the personal account, we have impersonal account. You know, account is classified into two: personal and impersonal account. What is impersonal account? This is a ledger account that deal with assets, revenue, and expenditure. Now, let me use this in a tabular form. This is a account. This is personal, and this is a impersonal. This is impersonal account. Under here we have creditors, we have debtor, we have capital, so that you know which items, which account they belong to. That's why this kind of topic is introduced, so as for you to know any item you see, you know where they belong to and which account they fall to. So any account like capital account, any account like Tunde Bola account, they are under personal account. Now under impersonal account, we have since we have been told that an asset is one that deals with asset, revenue, and expenditure. So under it, we have type of impersonal account. Personal account can be classified into two, which is nominal account and real account. Under it, we have real and nominal account. Now, what are the nominal accounts? What is nominal account? Nominal account, these are accounts in which income and expenditure are recorded. It also relates to gain, loss, income, expenses, e.g. like rent account, discount account, sales account. So under this nominal account, we have expenses. And what are the type of expenses? You know, we have rent, wages, and so on. And under it, we also have sales account. So if you see a sales item, you could have known that it is a nominal account, which is under impersonal account. We have the like income, loss, gain account or loss account. They are also part of a nominal account. Well, when we get to tribal account, we know how to differentiate this personal account when we are given any information that relates to this item. Now we'll be talking about real account. Real account, these are accounts of tangible assets, physical asset or property. And e.g. we have motor vehicle, we have land, cash, furniture, plant and machinery, stocks, and so on. So now under real account, they are part of the account that are tangible, that you can see physically. And we have a motor van, we have a cash, we have a stock, we have equipment and the like. So all those ones are what we call fixed assets and current asset. So any asset, any items that fall under real asset, like motor van, they are called impersonal accounts. Now, topic 2, we'll be moving to the trial balance and correction of errors. What is a trial balance? Trial balance is a statement showing list of balances in the double entry from extracted in the double entry form extracted from the ledger to test the arithmetical accuracy of the account. The trial balance is drawn up at a given date after all postings have been made in the ledger. So the total of debit and credit must be in agreement. So what are the importance of ledger before we go to the format? Because for a ledger account, ledger is a statement. Remember, it's not an account. It's a statement which you know, I told you the other time that accounting has a process from subsidiary book, cash book to ledger. After ledger, then you transfer them to what we call trial balance, and then from the trial balance you prepare trading profit and loss account. So what are the important? Why do we use a trial balance? It provides a comprehensive list of all accounts, therefore it saves time. So it helps, you know, having, you know, when you prepare different type of ledger, when you extract them and transfer them to the trial balance, it helps you to get the total and all the list of items that have been transacted during the year. So it provides a comprehensive list for all accounts, therefore in that course it saves time. Then another one is that to show the arithmetical accuracy of the entry in the ledger. I told you after you extract trial balance from the ledger, and in order for you to know that you are on the right side, it is when the side, two sides of the trial balance, that is what we call arithmetical accuracy. When it is not balanced, that means there is a problem with your trial balance, or depending on the posting of items, it might be due to figures or wrong figures or any other things that may warrant that. So it helps us to know the arithmetical accuracy of the entry in the ledger. Then the third one is it provides data for the preparation of trading and profit and loss and balance sheet as at that day. And that is the reason, that is the main reason of preparing trial balance, because those items, it will aid you in preparing your trading profit and loss account. We see a lot of illustrations